Hello and welcome to another episode of the Legal and General Just Covered podcast, where we talk to advisors and key stakeholders in the intermediary space. My name's Wayne.
And I'm Hazel, and today we are joined by Bob White, who is the owner of Mortgage and Lifetime Solutions. Key part of that name being Lifetime Solutions, as Bob's just been telling us. So welcome, Bob, to our podcast. Do you want to tell us a little bit about the type of advice you give and your background, please?
Yes, I came into the industry just over 30 years ago. Initially I did mortgages and protection, but then I passed my equity release exams 15 years ago, and I've been offering advice in both mortgages and specialist equity release products. So I've been doing that for over 15 years now, and I've got lots and lots of different scenarios, case studies that I've worked with, helped hundreds of people move home, give money away to their relatives, and buy a home and rent out the existing property, which was a very difficult case, but managed to get this lady into a 3-bedroom house with a garage from a 1-bedroom flat in Brixton. Wow. And she's very pleased, and she's still got the flat in Brixton, of course. She rents that out because we've done a let to buy on the current property, raised capital on that because she bought it years ago as a right to buy. She had some inheritance, put that together with the capital raising, and the money we raised from the equity release allowed her to buy a lovely property in Fulton Heath.
Which is amazing, because you'd always assume that as people, I guess we've got this assumption, don't we, in society, that as you approach later life, that you should be downsizing, you're getting your finances in order in terms of where you're getting the mortgage paid off, being debt-free, downsizing, and that, my background's in equity release as well, and I think some of the lists you just gave there of all the different scenarios of where it can help clients, a lot of people don't realise that, do they?
People don't realise what you can do with an equity release. Some of the cases I've completed on, I've surprised myself really what I can do and what I can do. This particular client, she was only on a NHS pension, so it wasn't very much. It wouldn't have hit affordability. The income that she's getting from her current property is also giving her additional income on top of her pension, and then when she's old enough, because she's only 62, she'll get a state pension, but she's also now got a 3-bedroom house with a garage. So she's very happy, very happy. But other cases I've got going through at the moment, a client that's going through a divorce and wants to stay in the family home and buy her husband to share out of the home. So that takes a little bit of time because, these things are complex. When she gets the financial settlement from her husband, when they've agreed it, which is taking a little bit of time, I then get an equity release to buy his share of the property out, the equity from the...
And that's life-changing.
And she will stay in her current home. And that's what it allows people to do, because when they separate age 50 onwards, the children are left home, that's when these things happen sometimes, unfortunately. Yeah. And they can both move on their separate ways. And that's why I enjoy it, because I can do these things that help people get a better retirement. The retirement that they deserve. They work all their life, you want a nice retirement. But when you get to retirement, it's not always easy. There's debts, people have got debt problems. And again, equity release can help with debt. There's a lady in Oxfordshire that she had a loan, but she didn't actually take it out. So she refused to pay it. And with a lifetime mortgage, that wasn't a problem. You could get the lifetime mortgage because the debts are not so important as they are when you're getting a mortgage on the high street. That sort of thing would be declined, especially if you had 6 months of arrears on the payments. So, and not only would it get declined, if it went to a lender that's adverse, they would charge a much higher rate. So, in all counts, it's helping the people get a better life and get a better retirement.
Definitely. And I think going back to that divorce case, we at Legal in General have done a huge bit of research on later life divorce and actually how it's growing. The more and more people are hitting later life, aren't they, and getting divorced. And it is interesting when we look at the amount of advisors out there who don't then correlate that with, oh, well, actually, there is the option they could keep the home. It doesn't matter if they've not got the funds readily available. Actually, equity release is a really solid solution for some people to make sure that they can retain that property, which for most is the bit they're probably most upset about giving up if they want
Absolutely.
to stay there.
When you have the conversation, you find that people don't want to move. The house might be too big for them, but they don't want to move away from their neighbours. They don't want to move away from their family, and the grandchildren come back to stay in the house anyway. So they don't want to move and downsize very often, and it costs money to downsize and move and all the upheaval. And at that time of life, you really don't want to move. Equity release solves an awful lot of problems.
And that's you're a problem solver. That's what I'm hearing. That's what
right.
you do. People come to you with these problems, and I mean, the feeling you get from when you provide these solutions must be great.
Yeah, I do. I've got a lot of satisfaction. I'm also thinking more, because I'm part of My Care Consultants, sort of Jacqueline Berry, and what they do and what I do, I think, come together as well. And they signpost people to the help they can get for care fees. And you can use that equity release to fund care in your home. Rather than going to a care home, stay in your home, stay with your family, stay with your pets, and get the help you need to come in, and you can release the money as and when you need it. You don't have to take it as a lump sum. So, the interest doesn't compound so much, but though you can pay the interest if you've got available funds. But I've got a client that's got Alzheimer's, and the daughter's trying to help her adapt the home. Downstairs bathroom and shower room and the kitchen, because she can't make the stairs, and having an extension on the back and making it larger, because you can see there's going to be problems in the future.
And how do you approach that with customers? Because obviously some customers might have the legacy thinking with a lifetime mortgage or equity release, the old stigma attached. They might have that, or they might just not know. They just don't know what they don't know. How do you approach the sort of options that are available and some of the things that they can do with a lifetime mortgage?
I take an awful lot of time. I do a very thorough fact find and look at the income and the expenditure. I don't always assume that they're going to want a lifetime mortgage either, because they could be a retirement interest-only mortgage. Yep. They might not want to be tied in for such a long time. It depends on their income and expenditure, the pensions, and a lot of other factors. But I explain it in great detail. And there's a lot of products, Legal in General, which they're payment term lifetime mortgage, which gives you a high loan to value, and you can take it out at a younger age of 50. You can both go on the mortgage and take it up to your retirement age on the payment term, but that's assessed on affordability. There are products at payment term that aren't assessed on affordability that give you a discount. And so there's people that haven't got the disposable income to meet the affordability requirements, and they can do them types of products where, again, you get a discount for committing to pay, and if you stop paying, they take away the discount. Again, it's flexibility in retirement. It gives people lots of opportunities to do what they want to do.
What I'm hearing here is like the perfect balance, isn't it, of a bit of flexibility that you can adjust things if you need, but enough stability that you can afford things, that actually you've got income to do what you want. It's all about unlocking that dream retirement, really, isn't it? And giving them that avenue to maybe know that pensions aren't growing as much as they used to. We know that people don't just have one job for life and then get a defined pension at the end. It's all a lot tougher now, isn't it, if people retire?
Even when you get your pension, it's not sufficient to meet your needs. When you was working, obviously, you done a lot more. And myself, I got to pension at pension age, and I looked at it, well, that's not going to give me the income that I need to be able to go on the holidays that I want to go on, to buy the car, to do whatever I want to do. So I decided to slow down and just concentrate on later life lending, because it's a massive area on its own. And I go to a lot of seminars, do a lot of training, and really enjoy what I'm doing and meeting people. It's great.
So you've got that passion for the subject, haven't you?
Yeah, I have.
And you're keeping your knowledge updated by going to seminars and stuff. So how important is it doing that, particularly in the later life space?
It's very important, yeah. You talk to people and, get ideas. You meet all the lenders and keep your product knowledge up, because the product's forever changing, forever evolving.
Okay.
And, you're always learning, because lenders are always changing their products. So it's vitally important that you attend training meetings, seminars, conferences, which I always do. I always try and do that. I'm part of the Equity Release Council. I go to their meetings, and I do training on air. And I've done the Institute of Banking and Finance training for later life lending, to keep all my knowledge up.
Yeah, I think that's the bit that people don't often realise is, and then certainly I didn't until I was in the kind of equity release spaces. We've got our own council, you've got that equity release council also guiding you, making sure things are fair for the consumer and lenders and people like yourself advising, and I think that's that extra safety blanket, isn't it? So when maybe mortgage advisors are thinking, oh, well, my clients would be too nervous that, or actually they've discounted equity, so they don't like the sound of it, they don't like it. Then that's something really, really useful to address, is that actually there are so much more regulation on it now than what there was maybe 15, 20 years ago, when it had quite a bad press.
Home reversionary schemes.
Exactly.
Yeah. People still think a lot about them, and you've got to change that perception. And not be forceful, and understand their objections, and explain the products. And when you do, someone says, well, that sounds too good to be true.
Yeah.
But it's not. There are drawbacks, the pros and cons and everything, but I think it's a marvellous product that allows people to give them the freedom in their retirement. And if in retirement they're ill and they need help in their home, again, you can finance that in your home without being pushed into a nursing home. Yeah. Because if you go into a nursing home, you're going to pay a fortune for it.
And we're seeing more and more advisors as well linking that up with like annuities, because they'll be thinking, well, actually they've got equity in the home that I can use to purchase a lifetime care plan, that type of annuity, so that actually that care is funded for life, and they're never then going to have that financial debt, financial worry, or be thinking that I can't choose my care home, or actually I want care in the home, and I've got no choice because I need to sell my home to pay for it. It's a really difficult situation at that age, isn't it?
Yeah. I link up with a lot of financial advisors and mortgage brokers and retired brokers to get referrals, but we need to do more of that, because there's no connection between the two. A lot of advisors just do what they do, and I do what I do, and there's no connection, there's no link up between the two, and there should be.
Yeah,
With consumer duty, you've got a duty to do the best for the client, to look at their future needs and take care of foreseeable harm.
It's almost like a community, isn't it?
It is.
They always say you should surround yourself with the right community, and I think that's exactly what it is for these clients. It's making sure they're the right people. When you're dealing with other financial advisors or mortgage advisors, what kind of top tips would you give them in terms of introducing you and the service that you offer? How do you ask them to do that?
Well, I start sending them more information in brochures for brokers. They give me an idea on what the client's needs are, and then I'll send everything out to both the broker and the client with regards to the product knowledge, the guides, money advice on equity release, which explains the difference, the pros and cons, and the difference between an equity release and a home reversionary scheme and the other options that might be available to you. So I'll discuss all the options, but very often it comes down to lifetime mortgage is the best option. They want the flexibility. It gives them guaranteed to stay in their home, so it gives them security in the home. Because if they don't pay them monthly payments, they're not going to get a CCJ or bad credit against them. Then they can start paying it when their finances allow. Make part payments, full payments. It's so flexible. And if they don't want to make payments at all, and they want to let it build up so it goes against the estate, sometimes that's a good thing, because I've got some clients, very high net worth clients, got a huge estate. So all that does is reduce the inheritance tax liability by leaving the debt on the estate. And one of my clients gifted money to the children from the equity, which I would have paid inheritance tax on, but they gifted it to the children to help them get that on the property
and
ladder.
provided they live for 7 years, then that's a win-win, isn't it?
Exactly. So there's lots of different scenarios. As I said.
I think there's two elements. There's a customer perception based on lack of knowledge on what's out there, and worry about, like you say, the impact of the situation, i.e. if I don't pay or repay a debt or regularly pay a debt, I'll get a CCJ or something bad will happen or whatever. But because of that lack of knowledge, they don't know the options that they're out there. Hence the remark to yourself that you've had many times, well, this is too good to be true. And I've had it personally with people I know when talking about it, when look at the options of maybe downsizing. You're right, they don't want to downsize at all, do they?
No,
For all the
not at all.
reasons you've said. They want to retain that flexibility and live their life the way they want to.
Yeah. And would you believe, a few years ago, when interest rates are very low, because I'm very interest rate driven, but also needs driven as well, but interest rates are quite important to me to get the best possible rate for the client. A few years back, before the rates started to increase, clients that got to the end of their mortgage, and these clients come from somebody in the city. There's a mortgage a financial advisor in the city, and they're investment brokers. So they had the money invested to pay for the mortgage. But when it got to the time the mortgage needed to be repaid, they said, well, I want to keep my capital and not repay the mortgage. They've done a lifetime mortgage at a rate of 2.3%. Now, if you know what the rates are now, that is a very, very good deal, fixed for
And
life.
it probably at that point wasn't the right time to take the capital out, because if you look at the way the markets are and the markets were going, especially around that time when everything was so volatile, probably wouldn't have been a savvy time for them to take the investments out either. It's given them that choice.
Not a good time, because now the returns on their investment is servicing the interest on the lifetime mortgage plus a surplus towards their retirement.
Yeah.
It's a win-win.
And here's so many things here, because again, it's, we've got customers you've helped who have actually had arrears and debt, and you can still get round that because there's no committed monthly payment. You spoke just before we started filming about a gentleman that had a bridging loan that urgently needed to be repaid, and again, you were able to help with that. We've got inheritance tax benefits, investment benefits. There's so many elements of equities, I think, that people are maybe unaware of, and that's why they don't mention it to their clients, that I think can learn so much from just.
And it's a specialism as well. You mentioned it earlier, working with financial advisors and others who are specialists in their own field, taking those referrals to yourself, because you're getting warm leads then, you're helping those clients, and there's a consumer duty element, as you've already said. It's so important, isn't it, to work together in that community, as Hazel already mentioned, within the industry to help clients.
Yeah. I got one from an advisor in Essex. The mother and daughter, the daughter was 66, the mother was 90, living in a static home, and paying a huge amount in service fees. They owned it. They had to sell it, and when they sell it, you have to give 20% to the site owners. And I managed to get them a lifetime mortgage in joint names, even though the mother's 90. And they serviced the interest because they were paying more than that in site fees for the mobile home. And they bought a bungalow in Essex. They're very, very happy.
I bet, and that's given them that stability. And thinking about 90 years old, the last thing you want to be worrying about is fees and payments. That you just want to be enjoying life at that point, especially. So, it's life changing.
Again, they don't have to pay the interest. They can simply stop if they want at any point, and they'll just lose the discount. And then they can carry on making payments if they wish, or they can roll up the interest. It depends on people's circumstances and needs. And that's why when we do the fact find, we have a lot of discussions about this and what you can do and what you can't do, whether it's flexible, what they want to do in the future, because you can move it in the future, you can port it.
Definitely. And would it be right in saying then, if any advisors are listening to this, for any clients they've got probably over 50, because there are, as we've got our product at L&G, that anything over 50, they should really be having this in their back pocket and be thinking, actually, is there a need here, or should I be roping someone like Bob in to even just have a quick sense check on what is going on with this client, and could there be other options? Because I think, as you said, you could even have the option, I guess, of doing that later life, because they've not got the month's payments, pay more into their pension. It gives people flexibility, doesn't it, at that point?
Yes, absolutely. As I say, people don't, not only do the clients not fully understand lifetime mortgages, nor do brokers. They're mortgage and protection brokers, no more. They don't understand the product, and the reason they don't, because they're not in the market, and the product's changing constantly.
I guess that's where we've got the kind of transition exam, isn't
Yeah.
there? There is a lot
Yeah.
to learn. You know, that's a small book with packed with a lot of information,
Yeah.
isn't it?
It's not just about taking the
No.
exam. There's a lot
Yeah.
more to learn afterwards. You just
Yeah.
keep on learning and learning and learning.
Yeah.
Keeping yourself abreast of all of that.
Yes. Yeah.
I mean, interesting. I say this about a lot of advice. Advice is a profession. Advice is a professional. You financial advice, whatever you're doing, but this is more so, or even more so, from a lifetime perspective. And to coin the use of the word life, you can't be you don't provide life support, but you provide lifestyle support.
Life
That's what
solutions.
life solutions,
go.
as you've said, and that is what you're doing every day. And you feel for those people that have got these really complex situations that think they're backed into a corner and they don't know where to go, and then they speak to you. Yes, you have to sit down, you have to explain it in detail, and you have to make sure they understand and use simple language, but the ultimate outcome at the end of that is that they can live their life in the way they want to. And that last scenario with the 90-year-old there was a classic example of that.
The scary thing for me from what we've discussed, though, is it's a bit of a lottery. Because you could have those people backed into a corner, really worried about their circumstances. If they go to an advisor who hasn't learned about equities or doesn't have a contact like yourself to give a strong referral to, that client could be left getting the home repossessed, or could be left not being able to afford the retirement that they want. So I guess that's what we want to do as an industry, isn't it? Is stop that lottery, and actually it should be anyone you speak to if you're getting advice, that they've got that ability to refer to an equity release specialist or later life lending
We should all be championing it, should we?
Yes, absolutely. More advisors would be referring people over rather than just saying, sorry, but I can't get you that mortgage. You've got too many CCJs. It doesn't meet affordability. And just say, or you're too old. At the application stage, lots of reasons that they can't get it, when actually there is an option.
Yeah.
But they don't know about this option.
Exactly, and that's the reason for this podcast, to
Yes.
champion that and promote it and get it out there. And when we've got experts like yourself been doing it so long, that are so passionate about helping customers and making sure they get to where they want to get to, that this is the whole reason for it, isn't it, Hazel?
Well, because at the end of the day, you don't know what you don't know.
No.
And as much as, yes, we're all in different areas of financial advice, as you've rightly mentioned, even if you know about equities, there are so many changes all the time with products, providers, services, criteria, regardless of which area we're looking at. I think it's really hard to keep abreast of it all and be that expert. So
Totally.
if we were to summarise the episode, Bob, what would you say is your one piece of advice that you would give to any listeners who are tuning into this?
Well, have an open mind on what you can do for clients. Don't just think there's not an option for them and say, thank you, I can't help, because there is, and it's just that it's not widely known. The products aren't widely known, but they are coming along. But there's people that on a very low state pension or on benefits that are struggling, that are sitting on wealth in their home, that can release money to supplement their pension monthly, not as a lump sum, but just draw it down as they need it. And then drawdowns don't have to be regular drawdowns. They can just draw down £500 at a time if they want £500 or more. You have a reserve facility that you can draw on, and that can help people that are struggling in retirement, help the grandchildren, help go on holidays. I had a lady with cancer. She wants to go on holiday with her grandchildren, and also gift her daughter who's going for a divorce, and gift her other daughter equally, and help them while she's still alive, because a prognosis for the cancer isn't good, and it's helping her.
And she'll probably get an enhanced rate as well.
Yes, she has.
Yeah.
She has, and but hopefully, she's having treatment for it, having chemotherapy for it, and it slows down the growth of the cancer. But you don't know how long you got left, so she's enjoying her life, going on holiday with her grandchildren, and helping her family.
What a lovely heartwarming story to
Yeah.
finish with, and really showing the value that you add. Bob, thank you so much for
Thank you, Bob.
sharing what you
You're
do.
welcome.
And
Appreciate it.
it's been a pleasure having you in. Thank you.
Thank you.
Thank you very much for inviting me.